Hi, and welcome to today's podcast where we have invited Darren Hayden Joseph from LJ Tax, USA. Darren, can you also give us a background of what you do and what your firm specializes in?
Okay, HTJ Tax, and the website really is HTJ Tax. So we help demystify the sometimes confusing world of cross-border taxation. So we work with private clients who are exposed to multiple jurisdictions. So essentially, if you're just exposed to one single jurisdiction, we're probably on the best team to work with you. But if you are a business owner, investor, nomad, or just an international expat who's exposed to multiple jurisdictions, we can help you structure your situation to be optimal while 100% compliant. And on the back end, we help you with tax returns as well.
Come to my next question. I want to understand, how does foreign tax offices look at a US LLC? So if I'm someone based in UK or France or even Dubai, so how does these tax offices look at when someone is operating a US LLC?
Again, it becomes quite controversial. It is not clear cut. Unfortunately, there are what I like to say promoters in the space, which tend to promote LLCs as a way of either legally avoiding tax or illegally avoiding tax, depending on how you structure it. So they're promoting it for purposes other than that for which they were intended. But be that as it may, you tend to have to spend time educating the agent that you're dealing with. And well, first of all, if it is that you are in whatever jurisdiction, you need to perhaps educate your own local tax advisors as to what an LLC is if they're not familiar with it, because they don't get that it's called an LLC, but it's tax transparent. So that takes some getting used to. And then sometimes there's misunderstanding on the parts of the tax office. The default really is the correct thing is that unless you have what we call economic substance in the US, so you have boots on the ground, you have a permanent establishment, you have a physical presence in the US, then the default treatment is that it is transparent and the income derived from it may or may not be taxable in the US, but it is also flows through and is taxable as business income in the jurisdiction in which you reside, not as dividends as some people tend to construe it. Some people tend to construe it as dividends, which may have some tax benefits under certain existing treaties or special tax regimes. But no, it is essentially business income if you don't have, let's say, boots on the ground in the US. I think what people don't often appreciate is this concept of a shell company in modern times, where we have something called the principal purpose test that is the active doctrine among most tax offices. And then the principal purpose test is the idea that if you have a structure, it cannot be an arrangement that has been contrived with the primary purpose of reducing or avoiding taxes completely. There must be some sort of commercial benefit. So it must be operationally functional. There must be a commercial benefit first, and any tax benefit after. So commercial starts first. And this is a principle that exists at the OECD level, at the EU level, and even within the US as well. When you get into the tax reporting side of the US, they do look for the type of questions that they ask on the forms, particularly Form 5472, the 1120. We'll get into that later. You can see that they're looking to see what transactions are taking place between the entity and related parties, obviously with a view to determining if there's an intent to somehow artificially avoid paying taxes in the relevant jurisdiction. Right now in the UAE, it's not so much of an issue, because so far, if you set up a company in a free trade zone, it still is, and you have no business onshore, you have no business within the Emirates, and it's completely outside of the Emirates, it's still tax-free, free of the 9% tax. But as the Emirates takes the first of many steps, and I think most professionals, that are, at least in my ecosystem, we believe that this is the first step towards complete harmonization with international rules. They want to get off the gray list, they want to get off the blacklist, they know what they need to do, but they understand that they need to do it slowly. So, but they've introduced the idea of economic substance in the relevant legislation and the rules. You can see it on the relevant websites. And they are taking steps to prevent avoidance using shell companies. So I'll leave that there.
Sure.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.